E-mini S&Ps opened the session moving higher, getting all the way up to 5,900. However, reversed back towards 5,850 to end the day, unchanged on the session, down on the week. We're down about 1% this week. However, taking a step back, looking back from those September lows to where we are today, we're up about 8%. So still a big move over a short period of time. Market focus has been all about Fed rate cut expectations, and over the last week and a half or so, it's been about earnings as well. So ultimately, stocks still higher, but seeing a modest pullback this week, again, closing out at 58.50, unchanged on the day and down about 1% on the week. Now, what does this mean for volatility? Well, typically, as we've talked about, volatility moves inversely to the indices. So as we saw E-minis moving higher, over the last several weeks, we saw volatility nudging lower. However, this week, indices were lower, and then we saw volatility moving higher. Volatility could be higher not only because the indices are lower, but we have key data points coming out next week, as well as looking further down the road, U.S. elections and that November FOMC meeting in 2 weeks. Now let's take a look at what we have next week. What are some of those key data points which will influence the Fed's decision on November for November FOMC? And that's third quarter GDP, the PCE data, which is the Fed's preferred inflation gauge, as well as non-farm payrolls, obviously a very important piece of the puzzle. We'll also continue to get earnings. Now, one thing we will not get next week is Fed speakers as they go into the blackout period ahead of November FOMC. So a busy week for equities. We saw them open higher today, but close low, actually unchanged on the day at 58.50, but down about 1% on the week ahead of next week's third quarter GDP, PCE data, non-farm payroll, and continued earnings.